Last Thursday, I had the amazing opportunity to talk to a UK tax employee who could help us understand a little bit more with what we need to know in regards to tax for crypto and NFTs, especially on Veve right now. So in this video, we're going to go over some of the base points that we talked about, some things that you need to pay attention to, and hopefully give you a little bit more knowledge than you had before. So let's get started. Welcome in everyone, my name is Andy and I appreciate you taking some time out of your day to come and watch this video on the channel. Just before we get going, if you are enjoying this content, you want to support me further, you can hit that subscribe button, and if you want to support me further than that, you can join the membership. I just want to give a massive shout out to Makingtaxsimple again for coming on the channel, talking about the taxes, because I know it will help so many people, and I'm going to just round up the points today. So I'm going to leave all of his links in the description. Be sure to go and check him out. He talks not only about crypto and NFT tax, but just tax in general, and is extremely knowledgeable in this field. This is definitely something that a lot of us have been needing, and I know there's been more conversations as of recently talking about tax and just what we should be paying attention to and what we need to know, and there's definitely a few things that could be interpreted in different ways. We're just going to give it the best understanding that we possibly can. First question is, should you be tracking and declaring your tax for NFTs on Veve right now? The short answer is just yes. Everyone has agreed that once MTL has arrived, this will be an essential. There's no way around it. There's no ifs and buts. But even as of right now, it definitely is up to interpretation depending on certain accountants. People are going to look at it differently because there really isn't any legislation directly involved with NFTs right now. But the best answer you could probably do is yes, to get ahead of the game. You're able to track everything that's going on. You're probably going to be able to find ways that you can save more money once this legislation does come about and just become a better investor as a whole. Again, different accountants are probably going to take this up to interpretation, as there really isn't massive amounts of law to actually cover when it comes to NFTs. Again, you are making money on this stuff. So if you are taking money out and that is something you've done, then yes, that of course has to be declared. But because everything is in Veve right now, it can be based as an attributable value. And although you can't take it out just in normal means, it still does mean that you're gaining on the things that you're making in Veve. Another thing you have to pay attention to is the conversion rate of gems to pounds. You're paying in dollars at the moment and it's $1 for one gem. People in the UK, we're going to have to look at the conversion rate of the pound to the gem when it comes to this, because this can also help you offset some stuff and also just a better understanding of how much tax you're going to have to be paying. So the short answer with it is yes, you really should be tracking everything that you're doing and should be declaring it. But again, some accountants may take it up to interpretation that it is not the case just yet because there's no MTL and there's no actual way of getting it out unless you're doing escrow. So ask your own accountant for this and what their advice is when it comes to it. Is there any software for NFTs and crypto transactions that I can pay attention to and use right now? Now, Makingtaxsimple named a few, namely Coinly and CoinTracker, to help you calculate some of the crypto tax that you're doing. The issue with this is it doesn't cover a wide variety and often has quite a dead set amount of things that it's going to be tracking. Some track your Bitcoin transactions, some track your OpenSea transactions, but there's a lot more places that most of us often spend. So there isn't one right now that does have it. And our hope is in the future that Veve actually allow us to see that transaction history. But Akomi Wiki is coming in clutch again and is working on something where we can put in the date of purchase and the purchase price that we're doing, and also able to export that with CSV, which is amazing. We can use that for our taxes, and that's going to be something that will help us out tenfold. There's nothing right now, I don't think anyway, that does everything unless it might be paid, but I've not been able to find anything that does it all just yet. And I'm hoping that does change in the future where we can do this, because it can be a little bit of a pain to track everything from every single different place that you're using and actually working out the overall tax that you're going to be paying for that year. Can you offset a percentage of the money that you're giving away to certain taxes or things that are happening within the app? Now, he said that yes, once you take it out, you will only be taxed on the gain that you make, but it will be important to keep track, as you'll then be able to be more effective with your accounting work. So when you take the 10% after the MTL, when that's been taken away from you, you will not be charged on the gain before that's been taken out, but it will be after that 10% has gone, and the gain that comes into your bank account will be the one that will be charged the tax on. So this is an important aspect to take note of and everything that's going on with that. Now, I actually wish I would have asked if you would have been taxed on the money that you would sold the profits for in Veve, and then again when you're taking it out. And it would be interesting to see how that actually correlates once MTL has arrived and how that's actually going to work. I would presume that you would be taxed on the money that you're making from the profits, and then again once you're actually taking the money out. But again, that's something to ask in the future too. What if I wanted to trade my NFTs to a family member to help offset some of the NFT capital gains that I'm going to be paying? This again is something you have to be very careful of. The only way that you're going to be able to offset any of the gains is through a spouse or a civil partner. Something like a sibling or a cousin, you're not actually going to be able to offset anything. In fact, you're going to be incurring the tax of the current market value when you actually gift that to someone. Gift someone something that is worth 1,000 gems and you gift them to a sibling, you're going to be paying the tax on the 1,000 gems, not them. And then they're going to take that on after they sell that. However, with a spouse, it'll be a no gain, no loss. Meaning if you trade something worth 1,000, it will go to your spouse and you won't be charged any tax on the 1,000. But if they were having to sell that for 2,000 right the day later, they would then be charged on the gains and you wouldn't actually be charged on the tax for that. So this is where the benefits can happen with a spouse or a civil partner, but please make sure if you're gifting it to a friend or a family member, this isn't the case. You're not going to be able to offset it from children, siblings, cousins, or anything like that. What about buying gems on Telegram? How is this going to work in regards to tax and what you're going to be doing? The conclusion that we came to was treating it like a stock or a cryptocurrency. You're getting your base cost and your average cost that you're paying per cryptocurrency or per gem for this, and you're just working it out over time. So at one point, if you buy 1,000 gems, $1,000, and then another point you're buying 1,000 gems at 0.5 of a dollar, then you're just working out the average of 0.75 for the cost basis that you're actually getting and declaring it that way. So we sort of worked out that it was more so treating it like a stock or a cryptocurrency in that front, where you're just getting your average price of gem, average price of dollar, and being able to work out the actual tax that you're going to be paying for that. NFTs and Veve, are they digital collectibles? Are they treated as such, or are they treated as a crypto? Well, right now, again, we really don't have legislation that is going to be able to determine exactly what they are. And because there's not books and books on this legislation just now, it can be open to interpretation. But for the most part, people are going to fall under capital gains tax, and some may fall under the trader tax, which is higher in the UK. So more often or not, everything that you're doing within this space right now is going to be going from net gain, net loss in regards to your capital gain tax. That's what's most likely going to be the case and will be treated as such until legislation comes out for it. Will gems to OMI be considered as crystallization? Now, what we'd mentioned here was that it's just the next step in the process of taxation. So you're being taxed from the gems taken out to OMI and then the OMI taken out to fiat if you do actually determine to go that way. So you will be able to do this, but you will be taxed just kind of in a similar format from taking your gems out to your fiat with gems to OMI, then OMI to fiat. So there's a few different routes that you can go about this. Again, if you're changing from a different cryptocurrency to another cryptocurrency, again, you're still taxed on that compared to the conversion on what it's actually costing at the time. A lot of us would buy a cryptocurrency to then sell that to USDT on Bitforex or SNDEX to then buy OMI. So you're just going to be charged the same way tax would happen with the comparison of the coins at the time and then moving from there. The final question we had was, could you treat your NFT work as a business? Now, this was an important question for me as I obviously create YouTube content with this, but I did say that you could potentially argue it as an expense, but it would be a hard one. And because it can grow as a gain, it would be considered another source of income for your business. So it would be challenging to define exactly how it would occur once you actually sell the asset for profit. And again, that's sort of how, in relation to maybe someone who's opened Pokemon cards on their channel, could probably offset some of that, but once they go to sell them, then there's going to be some form of capital gain there. And will they be able to offset that? If there is going to be a gain there, is it just charged as another income for the business? So it's quite a hard one, and you'd probably have to argue that in certain instances. A challenging argument as you're still making an income from that profit. I wanted to just give a basic overview of what was discussed, and I'll leave a link to the full live stream. We talked for an hour, some amazing conversation, so I'd highly recommend going to check out the full thing. I just wanted to give a basic overview of what I'd learned and maybe help you do the same. Again, be sure to go and check out Making Tax Simple. It gives a lot of amazing advice and just a better understanding of what you need to know in regards to tax, not only for NFT and crypto space, but just the general income space. I know the video on the screen now will be something you'll love to watch. Have a fantastic day.